Hello and welcome everyone, and before we get started here I just want to warn you a little bit that I'm going to have a few words of advice here, but I'm not an actual registered stock market broker or agent who can actually sell stocks. So any of my opinion that I'm going to be suggesting you in this video should be taken for educational purposes only. With that said, proceed with warning at your own caution with what I'm going to be saying in this video. Hello and welcome back to this actual Geek Tech show, and in today's special episode we're going to be talking about what actually happened with the huge stock market crash of 2018-2019 and what you should actually do about it. Before I get started with that, please, if you do enjoy this video and you found it helpful, please subscribe to this channel. It is free for you to join. There's going to be a link right down below, including a link to the video where I actually predict the actual crash that happened with Bitcoin as well. You can actually view the entire video in the link right down below too. Now, before I get started talking about this whole stock market, let's go ahead and figure out why did it crash right now. So this is actually very parallel to a few other major stock market crashes, including 1929, including the stock market crash of 1987, and of course 2008. Those are all been preceded by a recession or even a depression. The worst one, of course, was 2008, and not in our lifetime, even worse was the one from 1929 that preceded the Great Depression, where the stock market actually totally collapsed, and after that huge depression followed after that. Now, the 1987 crash, this one was actually about 30 years ago, with something very similar to what we have today. The stock market went ahead out of itself, and of course when it did, it totally crashed. The foundations of the United States economy were doing pretty good actually, and of course a few years after that it continued to go up until, of course, a recession, very mild, in the 90s, that President Bush back then actually lost the presidential race because of that small recession. So what actually brings this specific market crash to be? Why did it actually happen? When President Trump was actually elected, everybody was like, wow, this guy is going to change everything, and people didn't really like him, although the stock market seemingly loved the guy. It went up on a record run every single day. So in other words, people on Fox News were saying, look at your 401k, it is time to buy, the stock market going up all the time, the economy must be good, and so on, and continued saying that, and we kept watching the news. Of course, this bubble couldn't actually continue for that long, and the prices, stock prices of other companies were insanely overvalued. So the Fed itself kept on tightening up. Every single time they tighten, something has to give. For example, a company like GE, every time you tighten up, their credit went down, and in fact their stock is going all-time low right now because of all those problems. Now the more the Fed tightens up and cuts, not cuts, but actually raises the actual rate of the stocks, and what I'm talking about, the interest rate itself, every single time they raise the interest rate, stocks historically go down. But interesting enough, although right now the interest rate is supposedly at 2.5%, your saving account, how much you can make, how much the bank is going to actually lend you and give you money if you put your cash into a saving account, is still next to nothing. We have something abnormally going on here totally. So in a normal world, you would be still making 2.5% and change with any money you have in your actual saving account, if you had any. But something is going wild here. So other people put their money and savings into the stock market because they were pushed in there because they couldn't get anything inside their saving account. And in fact, if the recession was even worse, we would have had the same thing as in Europe, where they would go into negative rates, where they force people to actually take money out of the saving account and the banks and force you to actually spend it, depleting your whole savings into nothing and putting it in the stock market. And then if the stock market goes down, you're gonna have zero anything, nothing left. So pretty much, what do we have today? Do we have something very, very bad going on? What's going to happen in the future? Before we go into that more, we had a whole year of tug of war between the bulls and the bears, with the stock market going really high and going down and going back up again. And now it seems going down in a clip, similar to the action from 1987. But we have something else that is very alarming. In 1929, somebody very similar to Trump was doing very similar thing. He started those tariffs and a trade war. It sounds very familiar. And of course, the stock market went super high, and then it super crashed with those tariffs themselves. Now we have this tariff war going on with China. So what's going on here, and what could be actually done? Who is sinking the economy would be the question. And one of the reasons why it is sinking is that there was actually inversion of the yield curve, which means that you will make more money, the people who have the big money, if they put money into bonds instead of putting them inside of stock market. It actually became a safer place, which actually predicts a recession is going to be hit sometime in the future. Anyway, the stock market is pricing this in. And that's one of the reasons people, the professionals, pulled all the money out. In fact, before they pulled all the money out, you know what they did? They shortened the stocks. They make money as the stock market goes down. How do they make money? They do one thing. They short the stocks. They borrow against the stock market. And when they borrow against the stock market, prices start to drop. But before that, when you short a stock, it actually goes higher. So the record amount of stocks going higher is because the big boys were shorting the entire stock market for months. For months they've been shorting it. And of course, right now it goes up because as a retail institute and small time investors will keep on piling the money in. The big boys just dropped out. And what happens now, we have this free hour right between where the big boys used to be, right now retail investors, and all the guys with the big money who pulled out before at a good profit, which actually means that the stock market has room to free fall before the big money comes back in, scoops all those shares at super low price, covers up all the losses or gains. In most cases it is gains. So what's going to happen next is that for the next few days of 2019, before 2018, for the next few days, 2018 all the way to 19, is going to be a time where people are going to actually have to take, if you ask money in the stock market, they're actually going to be pulling those stocks right out, which means any stock that has been underperforming this year, they're pulling on the cash out of it to take into capital losses for this year. Same thing, all the companies that they were doing very good on, they already took the profits, I'm sure, right beforehand, so they don't care about that. What they're doing right now is that there might be a few hedge funds, companies that put a lot of money and did not see this coming, and of course they have to liquidate certain positions to raise money in margin calls, and regular people have to do it as well, which means they're pulling money out from stocks that are not doing so well. In other words, it's going to keep dropping for a bit. Now, the market itself is already in a bear market, which means more than 20% drop. We had another very similar, almost a bear market in 2011. People say this is a record amount of time. The stock market was going up, up, up since the year 2009. But in reality it was going sideways most of the time, and then around 2011 we had a huge drop, and then it was almost a bear market, but it wasn't. And then after that, from 2011 all the way to 2018, 18 we had a big run up until this so-called crash. So what should you be actually doing? If you have any money right now, what should you do? And of course, what are my suggestions to you? What I'm thinking is going to happen next. Well, there's two ways this can go. Obviously, if I'm going to be predicting what's going to happen in the future, I would be definitely a millionaire because I would know it all. There's no such person who knows everything. But of course, I could definitely predict in two different ways, and I'm going to be trying to tell you both ways that this can go. One way, and not likely, but it can happen, I would assume that it's going to keep on dropping pretty bad in the next week or two. And what's going to happen is it's going to flush out all the people who are pretty weak, had stops under those stocks, and the computer is just going to go right through the stops. That's why stops don't never work. They actually are going to stop you out of money, most likely. And it's going to save you in some ways, but most of the time it's just going to, you can't autopilot a stock market account. As it's going to keep going low, eventually the big boys are going to come in, scoop all those shares from you, and it's going to go higher again. Now, my thinking, the way I actually predict this whole thing to go, is that the big money and people are going to get eventually to a panic mode. I'm not sure when. It's going to be pretty soon, I think. There's going to be a huge drop. This has been big, but I think it's going to be even bigger drop. And then people are just going to start to scoop out. Before anything really crazy is going to happen, obviously they're going to do something to prevent this from wrecking the economy. So Trump has to do one thing. He has to make a deal with China as soon as possible. They have to stop the government shutdown as soon as possible, and potentially they might even have to stop hiking the interest rates. So monetary policy has to go smooth right now because they are walking on a cliff, basically, so to speak. Now, another thing that could happen, of course, with that said, once this floor builds in, then the stock market is going to exponentially, most likely, is going to go higher because nobody is really predicting it to go higher. I think it's going to go to all-time high once again. Now, I could be totally wrong here. It could, of course, keep dropping. We could have another recession just coming way before everybody predicted it. And, of course, anything can happen in the stock market. What do I suggest for you to do? I suggest for you to use some caution, but I think this could be once in a lifetime actually a buying opportunity in certain kind of stocks. And if you actually miss the 2008, 2009 time for you to buy, this could be it. I think it's going to be much more briefer than most people suggest. I think the stock market is just going to scare off a lot of people from investing, but most likely people who are going to be buying at the bottom, they're going to actually make money. Now, indicators, what we have to watch for. You have to watch for articles. There is a few websites that warn you beforehand, and you have to do exactly opposite what they tell you, such as zerohutch.com. That specific website itself constantly has some news that big money, I think, puts into it and feeds that site. Also watch Jim Cramer on CBS. He sometimes does exactly opposite what you're supposed to be doing, and if you hear him starts to panic, tell all his views to get out of the market. This is going to be actually the right time for you to get back in. And that being said, thank you so much for watching, and I hope that this was informative for you and hopefully gives you some idea what you should be actually doing next. And of course, if you enjoyed this video, please subscribe to my channel, and see you in another episode of the Geek Tech Show.